What if I told you you've been using the power of three completely wrong up until now? Many of you probably think, okay, cool, what is this guy even going on about? But if you take the power of three, accumulation, manipulation, distribution, and add this tiny little confirmation at the end, trust me when I tell you, you're going to see your win rate skyrocket. So stick around until the end of the video and you're going to see exactly what I'm on about. Hey guys, so welcome back to my channel. And look, like I've said, we're going to get straight into it, right? So when it comes to the power of three, so many of you already know what it is. It's all about accumulation, manipulation, and distribution. But what is it that we can add as an extra confirmation to increase that? The first thing we've got to do before all of that is basically understand this. Why do we even have the idea of AMD, or accumulation, manipulation, distribution? It is simply because whenever you've got an accumulation, generally what happens is you're going to get a build-up of liquidity on both sides of the market. So above and below the consolidation zone, you're typically going to get some sort of liquidity that builds up there, whether it's an equal high, whether it's buy-side liquidity or sell-side liquidity. The whole point is this: the market is going to move ultimately in one direction. You're either going to have a bullish day or you're going to have a bearish day. So either positive or negative. So how can we actually, how do the market makers take liquidity on both sides and ultimately moves in one direction? What it generally does, it will do a manipulation of a certain side of the market. Once it manipulates it and grabs all the orders, it will essentially start to reverse. Now, just before we head into everything else, do I really agree with the whole idea behind this type of thing where, you know, the market makers are basically trying to move it in one direction to take out liquidity? In my opinion, it doesn't really make that much sense. But again, it does work. You know, visually, when you look at the markets, you always get consolidations paired with some sort of manipulation and then a distribution sort of phase after that. So typically, the manipulation phase is something that we can predict, but we can't predict for how long it will go for. So the one thing I will know is whenever you're looking at the manipulation phase, perhaps it's not the highest win rate. The highest win rate will obviously be when you're having the delivery or the distribution phase. At that point, that's when we can really see progress happening. So typically it will be something like this. Again, when it comes to the consolidation, it really doesn't matter how it forms. It will either be based off time or it will be based off of sort of just general price action and how it's looking. Now, what is the tiny difference that we can actually make to this model to really improve our win rate? Now, as you know, a lot of people actually do something like this, where typically they will basically get the accumulation phase happening. The manipulation, they will try to guess. Now, how do they try to guess it? One of the ways you can do it is when you're in an uptrend, as an example, what they will typically try to do is something like this, where they will mark out their points of interest. So it could be something like this, it could be something like this. And they will basically try to plot out, okay, cool, this is basically where we're going to be entering some buys. Now, sometimes it works, sometimes it doesn't. In my opinion, you know, I believe that this is a much lower win rate type of way to trade. You know, I've done this in the past when I was just using SMC concepts and ICT concepts. You know, it's quite a basic approach to the market. There's no confirmations. You have a basic idea of an accumulation phase. We've now manipulated down and entering a point of interest. For me personally, it's not enough. So what can you actually do to improve it? One of the ways that you can actually improve it is something like this. If you can actually spot a sort of a minor change of character, because obviously it can't be too major, because at that point, the major one has to happen here. How likely is it that price will reverse down and continue back upwards? What you should see is something like this. If you see a change of character on minor structure, at that point, you can expect some sort of, bounce back to basically an order block or a fair value gap or something like that, and you would enter. So let's look at the three different options. What you can actually do is this. Option number one is going to be very, very simple. You wait for, of course, the change of character. So this is, in a way, this is a staple thing that you have to stick to. So you wait for the change of character first of all. Now, where it differentiates is something like this. Wait on extreme order block. Number two, you wait on the fair value gap. Or number three, you wait on any zone plus engulfing candle. So what is the main difference between all of this type of stuff? And let's actually draw this up. So in general, let's say we've reacted off this point of interest. We have now, taken some nice sort of buy positions or whatever. So let's actually make that mitigated. Let's put that as mitigated as well. So in general, when you're waiting for something like this, you're typically going to be waiting on the extreme order block. So what that will look like is something like here. You'd basically mark out the extreme order block. At times, there might be a couple of them. At times, for example, there might be one there. There might also be one there. Now, this is typically where you get some sort of confusion in the market. The downside with this is at times, you're going to get price not come back to the order block completely, and it just shoots off. But what you can do to actually improve this is move to the second step. You actually wait on the fair value gap. So just to confirm, if you're waiting on the order block, you just put it as tight as something like this. Again, the other option is you also put 2 orders. If you really want to take a safer approach, what you can do instead is as simple as this. You basically put your stop loss down below and you just wait for that extreme order block. Now, the other option is something like this, where you wait for the fair value gap. Now, typically with a fair value gap, it's obviously at the point of the imbalance. So where you see aggressive price action moving in a certain direction, that's obviously going to be a little, the area you're going to be looking for. One little tip I have as well, if you have a fair value gap overlapped with a previous fair value gap as well, that is typically going to be an area where you're likely going to get a reaction from it. Now, let's just say, for example, you're not in the market and you've actually missed your trade. So this would have been the fair value gap. Your stop loss would have been below that sort of market structural low, and that's how your trade would have looked like. Let's say, for example, you've missed out both entries because of whatever reason. The first one, you missed the order block, price didn't return to it. The second one, the fair value gap, you were waiting around for too long. What is the next final thing that you can actually do? The last point that we can really look to, if you've missed setup 1 and you've missed setup 2, setup 3 is waiting on any zone. It could be the fair value gap, it could be the order block, and then you wait for engulfing candles around that point. Now, what I've done, I've actually created an entire free PDF, which is down below, and you will get, completely free access to that. Essentially, it's shown my entire engulfing candle strategy. So I go very, very in detail with that type of thing, giving you examples and giving you scenarios of what you could look for. So definitely download that whilst you've got the opportunity in a way. And basically, you're going to understand that in a lot of detail. But when it comes to this, essentially what you're going to be waiting for is something like this. A reaction from this type of zone and an engulfing candle up. This engulfing candle must be significant enough where it doesn't just engulf, the last few candles, but engulfs quite a few. And let's say it even engulfs structure as well. So that would be an added benefit. So when you're looking at something like that, all it would be something like this. Now, the downside to it is your stop loss is typically going to be larger than usual. You're not going to get it as pinpoint as, let's say, the order block. So it really is up to you. Which method do you prefer? Do you prefer taking the chance and the risk of losing a potential trade not losing, but missing the opportunity of a good trade? Are you potentially going to be entering on a fair value gap where, okay, that's kind of the middle ground? Or are you going to be very, very well confirmed where your win rate is very high? Your frequency of trades is also going to be quite high because you're not missing them. The only thing is obviously the risk to reward is going to get lower. For me personally, this is something that I've employed for the last year and a half. As you know, for those of you that watched my entire journey, I've used SMC for the longest while, and it came to the point where I wanted to have something more mechanical, something that I can stick to sort of daily. This is my step 1, 2, 3, 4, 5, and I can really go out there and prove to myself I can get that high win rate and the confirmations are there. That's exactly what this type of thing is for. So if you are using the power of 3, accumulation, manipulation and distribution, this is the exact type of confirmation you want to be looking for. Again, these concepts can be applied on the higher time frame, but they can also be applied on the lower time frame as well. So if you did find value in this entire video and you have obviously stayed up until now, please do like and subscribe and get the word out and give me your experience of this in the comment section down below. Again, one little thing is this: I'm no longer giving my elite strategy out like before, in a way, with the course and all that kind of stuff. And in a way, I'm giving out as much value as possible. The engulfing candle is something that was one of the biggest confirmations we use within the elite strategy. Again, pairing it up with things like power of 3 and any other sort of ICT concept, that's obviously going to get us that higher win rate. But yeah, that's going to be it, guys. So I hope you have appreciated everything. And yeah, leave a like and a comment down below, and obviously subscribe, and take care, and I'll see you all in the next one.